Hey guys, this is Alex from Freedom Trading, and here we are closing day number 2 in the simulator. Again, it wasn't as bad as yesterday, but I did have a pretty lackluster day today. I got a little frustrated, I must admit. Went outside my game plan on the day. My trades, I stuck to my plan pretty well, but I did break kind of my thoughts going into the day. Or at least the thoughts that I planned on going into the day with yesterday when I closed. As you can see here in this window, this is my watch list. This is a result of my pre-market analysis and research. And there are a lot of tickers on this list. There are a lot of things that I thought might have potential. And as you can see by my trades window up here, I didn't actually get involved until about 10:15. Which certainly speaks to the type of day that it was. It was, there was a lot of just failed setups and lack of momentum at all. There wasn't even, some random runner or nothing really was hitting the scanners. And I was just about to pack it in, to be honest. I didn't think I was going to take a trade at all today. I ended up taking 2 on OVID, which I played both sides on. I'll get to that in a minute. 2 things I want to say first. Is I believe that OVID is going to be closing below 280. That's a prediction I'm going to make right away before it gets there. And second of all, I think a lot of the weakness in the low cap sector was probably due to all the attention being paid on higher name stocks. There was a lot of action on Netflix, and I don't remember the other one, but there was quite a bit of action being focused towards the large caps, and added to just the general slowness of the market in at least the last week and a half. That's all I've been studying. It seems to me like there's really just a lack of enthusiasm among traders. A lot of these moves are just fading back down, and so I decided today to get involved on the short side on one of these plays. So pretty much my whole approach to this was I was always thinking short on OVID. There was a time down here coming out of this flag here that I thought, okay, the volume profile is looking really good, and I could probably ride this up a little bit, as that's what happened in my first trade. But overall, I thought just the attitude of traders and the conditions within the market added to also fairly well-established resistance on the daily chart. I didn't think this thing was going to go any higher than 360 and probably not even crack 350. So my goal was to try and average into a short position below 360 or 350 rather. And I was intending initially to take the bulk of the position as soon as it broke down, bouncing off that level. What I ended up doing is taking a starter pretty low and then adding to it as it was ramping up, which is certainly more risky, and that's why I think part of why I think that this day was pretty sloppy. So my long trade is the one that I think I just gave away $34 for nothing. I didn't have enough patience on it. I didn't really plan my stop well, I don't think. Also, I got filled high on the entries, so I was already a little hesitant to hold it longer. And it was on this candle here that I had entered. This is a 5-minute chart. And I ended up getting stopped out on the very next 5-minute candle when it double topped at 32 and then came back down. Now, my exit was 4 pennies away from the bottom, and that's when it reversed and went back up. And at that point, I was kind of frustrated with the long. I didn't want to get back into it and try to ride maybe 8 or 12 cents up to the long side before flipping short on it. So I decided to just accept this loss and move on and start really focusing to the short side, because what I was seeing in the level 2 and the tape was that even though there was a lot of visible bid support going up, especially on this ramp up right here, this is a beautiful volume profile going up, and it's something I failed to capture. But what I saw in the level 2 the whole way up, including on this volume pattern, was that there were a lot of hidden sellers on this stock. And I looked at the institutional ownership. It didn't really give me a clear sign. A couple of factors combined to confuse me a little bit. But overall, I felt that there was just no way, with the attitude of traders over the last little bit, that there was going to be enough upward pressure to maintain this rise throughout the day. I thought it would reverse, and it seemed to me that the most logical place for it to happen was just below or just above 350. So that's pretty much where my max risk was. And as a side note, I'm going to point out I typically operate with two different stops. They're all mental stops. I never use hard stops. But I separate my stops into two. The first one is sort of when I start thinking about exiting, and if it can happen cleanly, I might get out exactly at that stop. And then the second one is what I would consider, or what I would call, a hard stop, but it doesn't include an order that's hanging out in the market. That's the point in the trade where, okay, this is the line in the sand. No matter what the other factors are, this is my maximum dollar risk amount or percentage risk amount, whichever way I'm looking at it. And that's the point where, okay, the rules are you have to get out of that trade. And for me, those 2 points in this trade were 351 and 360. So here I've blown up the 5-minute chart to give a little bit clearer visual here. And as you can see on the right side where my order entry or my trades window is, I took my first entry at 325. Now, I mentioned earlier that I was, pretty confident that this thing was going to bounce at no later than 350, 360. However, I wasn't 100% sure that it was even going to get there. So this entry of 325 was sort of like insurance against if the stock didn't get up to 350. I was perfectly comfortable averaging the wrong way. As you can see later on, taking entry at 335, which is going on the way up. And the reason I felt totally comfortable taking taking an add-on on the way up was that's when the hidden sellers really started to come out, and the buying pressure sort of slowed down. Not quite all at once. It was a little bit confusing, I must admit, but it was very clear to me that the volume needed to keep pushing it up would be just too much. And so I had intended to actually keep adding on the way up. As it turns out, I missed those entries, and I didn't. By the time that it got back up again, I wasn't feeling the same read that I had on the tape. So I didn't end up adding a third time higher up. I waited until the fall really started becoming obvious before I took my third entry at 324. Now, very shortly after I took my third entry, I had a bit of a gut check moment. As you can see on this volume spike here, this is the largest 5-minute volume bar of the day, which definitely made me a little uncomfortable, but it didn't really get close to my stop, at least not as close as the initial rise did. But I was a little bit worried in that there wasn't the amount of resistance that there was on the previous run. So I thought, maybe these sellers canceled their orders. Maybe there's something hidden going on that I'm not picking up on. And that's when I really started to doubt my strategy and also doubt my profit target. Initially, I had expected this thing to run pretty cleanly down to 285. So you can see when we started breaking down, and then I added at 324 on this candle here. I thought, we weren't going to break the high of the previous 5-minute candle. I thought there was going to be a little sideways consolidation, and then a drop further down to probably 310, a little bit more consolidation, and then a drop back down to 3, possibly all the way back down to 285. That's the game plan that I started with, and I based my profit targets on those sort of reads. Now, I started getting proven wrong in this area here when we popped back up into the 40s. And even though this rejection was pretty distinct, I was losing confidence in the setup. And, we always say you aim for 2 to 1 risk reward ratio. But in practice, you don't always get there. You have to always be adjusting to what you're seeing. If the evidence changes, well, then your attitude has to change. At least that's the way I feel. I don't like going outside my comfort zone. If the evidence is screaming something at me, it doesn't matter what my initial thought was. I have to adapt to that plan and make sure that I at least book a little bit of profit and protect myself against having a green trade go red on me. because there isn't much that annoys me more than being up on a stock, having the opportunity to take some off the table and pay myself, and not doing it because I thought, because I'm so attached to my initial plan. So I started covering my position on this, on this bar right here, the second long body, and looking back, I do think that my first exit was a safe one. I got out at 316 for 500 shares, which was a third of my position. And I wanted to really see some sideways consolidation and then a break below 310. And the trouble really started happening at 310. As you can see here, it bases out, or it double bottoms rather, at 309. And when I had an opportunity to get out for another 500 shares at 310, I did. You can see in my trades window that these two exits were very close together. They were just over a minute apart, and they happened on these two candles here. And there was a lot of kind of weird tug of war going on around the 310 mark. And that just kind of solidified my the suspicions I had with my initial targets. And that's when I started thinking, well, I don't think we're going to really get the cleanest run down to 280, 285. And so let me just book what I can right away, because, you know, I was already not that happy with myself for the long position that I took on this. And here I was, you know, finding myself not really getting the result that I had predicted on this short setup, which I had very strong conviction in. I mean, I took 1,500 shares of a, you know, $3-something stock, and that's more than my account equity. I was marginalized on this. And, you know, that's not something that I'd really want to do, even though I would be able to with an equivalent broker. That's not something I want to do unless I'm extremely confident in the situation, and my confidence had faded pretty much all throughout this trade. So I like my decision to cover at 310 especially, and I also like my decision to adjust my stop. Now, these lines that I have put up here, this is not entirely representative of what I was thinking. At the time that I had covered the second third at 310, I moved my mental stop to 330, 333, which was 5 cents above my entry. So I basically guaranteed myself a green trade, but I also wanted to give myself the chance to be fully right on my initial prediction and let this thing collapse below 310, because with the bounce back here off 310, which sent another run up towards 350, added to these 2 points right here, I thought, okay, this support level is looking pretty good, and if it breaks, then the breakdown's probably going to be another case like these two candles. And, you know, I could get another maybe 20-25 cents out of the drop, and that would fulfill my initial profit targets. So I wanted to give it a chance on the last 500 shares. And as you can see with the time difference between my first two exits and my final exit, there's about 12 minutes. So I did give it time to run. And as this next candle closed, I moved my stop down once again to 319. I didn't want to see a ramp back up, even though we were making lower lows and lower highs. I didn't want to see it pop back up. I didn't want to hold for another run up. I decided by that point that, okay, I'm pretty much done with this trade. It's just a matter of how much I'm going to get on the last piece. And so as we moved over to this candle, which is more visible on the 1 minute chart, I decided that it would be a good idea to just cancel the wider stop that I had planned and continue bringing my stop down with every 5 minute candle. And on the very next one, that's when it popped back up. The volume wasn't all that intimidating. The tape wasn't all that intimidating. But I just, you know, having had a very bad day yesterday, I wasn't really in the zone. So if I were to summarize this day, I would say it was a little bit sloppy. Not super happy with the profit-loss ratio that I ended up getting on that short. I did have bigger ideas in mind, but at the same time, you know, I made some devastating mistakes yesterday and did not get devastated as a result. I have recovered all those losses and then a little bit more. I'm going to open tomorrow in the green in the account, which does feel good, because a little side note here, for those who don't already know me, I have a very notorious history of dropping immediately like 20% of an account every time I start it. It doesn't matter if I'm trading live. It doesn't matter how big the balance is. If it's a simulator with 40,000 or if it's a real money account with 1,000 or 10,000, I'm really notorious for sort of having weak starts to my accounts. And so to be able to at least get back green after that scare yesterday, I was happy enough with this day that, okay, my trade didn't go great, but let's just accept that and wait for better setups, because I think if I were to replay this day, my best play would have been to just not take any trades at all, simply because of the condition of the market. There wasn't anything in there that really fits what I'm looking for. I'm mainly looking for bull flags right now, and I had to stray away from that both today and yesterday, and probably over the next couple days I'm going to have to do it too, or just avoid trading, because I have very little margin for error. I'm working with a $2,000 balance. I have extremely high commissions to work with. My simulated account fees are very high. I can't afford to just splash around willy-nilly and just take these 10-cent scalps all the time. I have to be, hunting for really premium setups. And although I did have high conviction in my moves today, or at least my short play today, it's not super ideal. So going forward, I'm going to be looking to tighten it up a little bit and really look for the kinds of setups that I'm the most comfortable with. I think more than anything, I really want to see just substantial movement on the low float stocks within my price range. And I think today is something that really details, that was really a sign that I maybe shouldn't trade today, or that I should, be more selective, is the situation on my watch list. I mean, I have two stocks here that are under $1, and I have one that was above $10, and the one that's above $10 too. I mean, this thing's been getting slaughtered. It's Overstock.com, and it's currently, at the bottom end of a drop from $30. It's down over 60%, and it's, probably heavily shorted. Just not super amazing. And just to play stocks under the $1 price range, they're non-marginable, or at least that's how I'm going to simulate them. And the commissions really add up when you're wrong on these types of things. So I'm looking for, ideally, a low float bull flag type setup, a secondary move coming out of the bell on a stock that's between maybe $3 and $6 or $3 and $7, so that I can use margin and really put the hammer down and take risks safely, but also give myself a chance to have, a multi-$100 day early on and get a solid cushion to this account. So that's it for me today. I'll be at it first thing tomorrow. One note I do want to throw out there before I go is that if I don't take any trades in a day, I'm not going to make a recap. You'll hear that I was inactive on the next active day that I have. One of the problems I'm having right now is that I'm running out of hard disk space very quickly, and so I have to be pretty selective. I don't mind making these recaps, but I'm not going to be making them if I don't take any trades.